What's going on, everyone? This is Andrew O'Connell with Pristine Capital, coming at you with yet another market recap video. It is March 16th, 2021, a few days away from options expiration. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action, the indices. We'll go under the hood and check out the sectors and style factors. We'll talk about some of my trades for the day, and we will wrap up with some options order flow. But before we jump in, and I'm going to try to say this as quickly as I can, like an infomercial. Quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right into it for today. And let me just turn my phone off. I just got a text message. So we have our ES futures box scores for the day. We had the S&P 500 finish down 0.13%. We had the NASDAQ QQQ finish up 0.55%. We had the IWM small caps finish down 1.67%. And we had the Dow Jones finish down 0.37%. So in the morning, we had some economic data come out. We had retail sales data and we had industrial production data. And both were misses. And the entire narrative that's been, circulating the past month or so is like, oh my gosh, the economy's getting so amazing. It's going to overheat and there's going to be so much inflation. And, the economy's going to be so great, the Fed's going to have to remove monetary accommodation and all this stuff. So these cyclicals have really been rallying. Today we got two big data misses. And one thing I said in a pre-market webinar is let's see how this affects those cyclical areas of the market today. And sure enough, this was the first, I would say like pretty deep pullback in value names versus growth in quite some time. So you can see here, we had our S&P 500, nice breakout above the monthly value area yesterday. And today, in typical Chopex week fashion, really just some chopping around. We ended up closing pretty much flat for the day with some intraday scary volatility. If we look at our NASDAQ QQQ, you can see we finished up 0.55%. Did not close on the highs today, that is for sure. And the day sort of left off with a little bit of an question mark where we closed like pretty much right on the 50-day moving average, maybe a little bit below it. But I think the good thing and the glass half full version of this is we closed within this monthly value area. At one point during the day, it looked like we were about to slip below. So that's a good thing that we at least sort of just put in a doji candle. Nothing too crazy. At this point, it's all going to come down to Fed Wednesday. And you can see here, a lot of times we do get some big intraday volatility for Fed Wednesday. Sometimes it can be a big turning point in the market, depending on what's said. So I'll be tuning into that tomorrow. We have our IWM finish down 1.67%, pulled back to just this 5-day exponential moving average. So in the grand scheme, nothing too crazy. This is still in a very bullish trend. And then our Dow Jones. And I'm trying to work through these videos a little bit faster. We'll see how quickly I get done today. We have the Dow Jones finish down 0.37%. This one's still also in a very bullish trend and really just taking a break after a pretty epic run here. So let's take a look at our Finviz Heat Map, and then we'll pull up our sectors and style factors. Finviz Heat Map, pretty much, all the tech names are really the only ones that were green. I mean, breadth was very mixed throughout the day. And you can see we had the FANG names that were green, the semiconductors, which were nice and green, including Micron that I have my call calendar spread in. Tesla was a laggard. You can see finished down over 4%, even though the other tech was green. So that's kind of noteworthy. But yeah, then the travel stocks, they all saw some profit taking, energy profit taking, financials profit taking, industrials, etc. So, I talked about this a bunch of times, but the cyclicals and the value stocks have gotten so extended at this point. And for Pristine Capital members, I'm always talking about this where every asset pulls back to those key moving averages at some point. And if you look, this is, the Russell Value Index. we're still pretty extended from the 20-day simple moving average. So at some point, we are going to get that pullback to the 20-day. It's inevitable. So we'll just have to see when that happens. And, if this is strong enough where it'll just consolidate sideways and the moving average will come up to meet it. So we have that. Now, if we take a look at our sectors here, you can see we had, a lot of red on the screen today. So some of our top sectors, some changes up here at the top. We have our blockchain ETF finished down over 3%. We had the retail ETF down over 2%. And we had the YOLO cannabis ETF down 4.5%. Today, some of the laggards, were actually pretty positive. We had KWEB, which is the Chinese technology fund, up 1.2%. Our video game and esports ETF up 1.58%. But yeah, you can see there were little pockets of strength in the market, but overall, a lot of red today. And if we look at our style factors, you can see here high beta finished down big, cyclicals down big as well. And some of our leaders, we had international momentum, which was up 0.75%. And then next was the Minvol ETF. So towards the middle of the day, I just started noticing like, okay, the market's just chopping around here. Do I really want to have, a ton of exposure on ahead of this Fed Wednesday? And what I like to do during OPEX week is kind of clean things up a little bit anyway. So like I posted like getting a yellow light from the style factor sheet because I saw that the Minvol was very bid. Another yellow light from the VVIX because you can see the VVIX was pushing a bit higher throughout the day. So you can see a nice green candle for the VVIX. And I said here, where was this? Yeah, the market trend is up, and I'm not going to have my foot fully on the gas into the Fed meeting tomorrow. And I actually got, honestly pretty lucky where, going to my trades, I was taking off a bunch of trades before we got that liquidation break. So that's like, one thing I didn't really do so well in February. Once we started downtrending, I wasn't really that proactive in terms of taking risk off. So that's something where like I did a lot of trade journaling, looked at my results, and I was like, that's something I want to be a little bit better at. So for today, I was pretty proud of myself. I did a lot better in terms of doing that. So Silvergate, this stock had a really nice move. I'm pretty sure the whole move fizzled by the end of the day. Yeah, it did. But this stock, you can see it moved all the way up, to 174. So I had a butterfly on in Silvergate. I had taken 1/3 of it off. I believe this was yesterday. I paid $2.60, closed out a third for $3. Today I was able to take another third off for $6.30. So that's a nice, more than a 100% return. That's like a 150%. So that's the good thing about these butterflies. Like even if the final third, say it just doesn't work and it's a zero, I locked in where, I'm going to make money on this butterfly. I also took some GLD puts today. And I'm not going to be able to walk through like in detail every trade because that just makes the video very long. But yeah, you can see here, gold tagged the 20-day simple moving average. And it's still just in such a bearish trend that I was like, no better time to short this thing than the retest of the 20-day. So we'll see what happens, if it falls right back over or what. Yeah, added those puts onto the books. I was more towards the morning. So this was at 125 when I started just saying, hey, let me clean some things up because, I'm feeling a little bit less confident in what's going on here. And then I looked and I just had a lot of calls on the books. So I was like, let me just remove some. So I closed out my clean energy calls. I had some January of 2022 options. I paid $4.50 for those and closed them out for $4.20. So this trade, like I lost 30 cents on it, but this is like, you want to keep your losers like nice and tight. That's another thing, for this month I'm really working on, like keeping the losing trades tight. You don't even need to have like a 50% win rate and you can still be a prolific trader just making sure that you keep your losers as tight as possible. So this one, like, I almost get a thrill from taking off a loser if I'm like, yeah, I totally like risk manage that. Yeah, that was looking good. And ICLN actually ended up closing much lower than where I took it off. Because, yeah, you can see this thing, sure, it had a nice little bounce, but it's not really showing me any relative strength or anything like that. So I was like, do I really need to have this trade on? Not really, especially when the Fed meeting could end up being very volatile. So I'm glad I took that one off. I took off a couple others as well just to clean up the books a little bit. I closed out an LVS diagonal spread. I had paid 409 for that. Closed it out for 448, so made a nice small gain there. I took off some GRWG calls for 13 bucks. I had paid 11.45 for those, and then I closed out MLCO calls for 295. I had paid 340 for those, and I lucked out. Or this was like all this cleanup was like right before that big volatility spike intraday. Then I closed out EOLS. This was in the morning at 10:12. I just took a target in it. I had paid $13.59. I closed out half of it for $14.08. VIOT, I also took a target in. This was when the market was kind of like really getting volatile intraday. This one I really just wanted to protect my gain, so I closed out VIOT for $13.94. I'd paid $13.05 for it. And then towards the end of the day, like, I was fortunate enough to have lightened up on a lot of positions, just proactively. So I was able to buy the dip in XPEL, which is a name I've been watching. I traded this one last week and made some money in XPEL. This one just looks like a strong setup to me. And this one, it's a risk I'm willing to take. So take a look. XPEL, and I got a nice trade location on this one as well. This one, like, planned out the trade, executed it, so I feel comfortable knowing, okay, I got a nice trade location. So XPEL had a really powerful move to the upside on the earnings release, and the earnings were solid. I took a look, numbers looked great, and you can see we got a breakout from, a base that's been building since the beginning of December, really. So we got that breakout on the earnings on high volume. Now you can see over the past 3 days, we've been sort of pulling back / consolidating, but on much lower volume here. So I like this setup so long as we hold this 5-day EMA and this value area high right here. And I was able to pick these shares up pretty much right off of that 5-day EMA. So I was able to buy this one. Let me see what price I got here. Yeah, so I got in for 60.50, which is pretty close to the low end here. So you can see, yeah, pretty much right above that 5-day EMA. And this one ended up closing at 61.36. So that's the best thing for me as a trader. In a perfect world, I want to be winning the trade the same day that I put it on. If I put it on and I'm already losing at day one, I notice my win rate is a lot lower. Because pretty much, like, if you're winning on day one, that means you got a good trade location. So this one, we'll have to see what happens with it. But yeah, I like this one, and I would like to see if I could play it all the way up to $67 a share, assuming the market, cooperates. And if we take a quick look at this options order flow, let's take a look here. Okay, we're still doing okay on time. So really quick. And so we had a lot of call flow in the morning. So you can see we had GameStop calls coming in, Airbnb, Boeing, Apple, just a lot of names that have been showing some momentum. A lot of call buyers coming into those names. Of course, once the market started getting a little bit more volatile throughout the day, then we started getting more put flow. And yesterday, the put to call ratio was very low. So, market participants starting to get a little bit more complacent again. And you can see those puts started coming in around noon. A lot of Qs puts coming in. And what's funny is, like, the Qs as of the last 2 days, they're leading the market. But people keep buying these Qs puts, I think, because of that inflation narrative, all that stuff. So who knows? Maybe they're right. But yeah, I still have my Qs calls on. Those have been doing pretty well. And then we had a Disney call buyer come in. Disney looks like a nice setup for tomorrow. So let's walk through this one. I have a Disney diagonal call spread on. And it worked out that I did the diagonal because Disney, really hasn't done anything for the past week or so. And that's where a diagonal works, where you can collect that time decay. Yeah, you can see Disney had a nice pop higher. I sold out of my naked calls here for a nice profit. Then the following day I entered the diagonal spread, and we've kind of just gone, sideways to even a little bit lower for the next few trading days. Disney tagged the 20-day simple moving average, and it closed right on this value area high. So at one point during the day, I was actually contemplating maybe I should just add a little bit to my Disney or close out the March 19th short call that I have on it. I was like, you know what? I'm going to be patient. If the trade is going to work, it's going to work. It doesn't matter. So we'll see what happens with Disney, but I like this setup into really the next couple weeks because you can see buying pullbacks to the 20-day has paid in Disney, the past, several times. We'll see if it pays again this time. That about does it for this market recap video. Hope you all have a great evening, and I will see you all tomorrow in the pre-market webinar.